Good morning, traders. Today, what I wanted to do was a quick market recap on what happened yesterday and also what's happening today. The reason I want to do this is to give you some background into how our strategy works, and this is very, very important for some of you. What you need to do is you need to believe that what you're using is good. You need to believe in the strategy so you can trade your strategy. If you don't have confidence in the tools you're using to trade and to give you your signals, then your ability to follow those signals is going to be severely compromised. So today is about giving you some more information as to how our strategy works to a certain extent to make you realize that it's built on some really solid foundations, and that just it's obviously backed up by the equity curves that you've seen, which are second to none in the industry, and um, and all you have to do is follow them, and you'll be able to produce exactly the same curves. So let's start off. Looking at the charts, this is the beginning of the Asian session, in the early hours of yesterday. So the trend began in the Asian session. It continued up. We got to the UK open time, and the trend continued up. If you were trading with us yesterday, following the signals exactly as they came out in real time on our platform, you would have got in around the UK Open, and you would have got out around the very peak here. It was quite amazing. It was a good day. You would have generated around 300 pips. I think we achieved yesterday on the pound yen. Although it was a good day for the majority of our currencies yesterday, we achieved 900 points in total. You would have been fairly happy with that. The market then went sideways. It's fairly typical for the market to go sideways and maybe consolidate or attempt to do a retracement after a strong move up. We don't trade during the Asian markets. Markets are fairly stilted. They don't move as we'd like them to. We want to be in there for a strong move. So around the London Open, we'd be looking for signals. So sideways movement, we're now looking to see what happens. Here we have a very strong candle. Everyone in the world will be looking at that and thinking the same thing. The trend is going to continue. So everyone gets in, everyone becomes bullish again. The market is expected to go straight up. Now, what does the market do? Everyone's got in. The market then decides it's going to go down. So, okay, that's fine. Markets move down as well before they go up. But the degree by which they move down is the amount of pain you're willing to stand. Now, today is no exception to that. Everyone would have got in, and they'd be placing the stops I don't know where. But what would have happened then was the market came down, the pain started to grow, a wave, another wave down, the pain grew even stronger. People are starting to think, oh damn, I've done the wrong thing. Now, if you're trading a decent strategy, the strategy will be clever enough to realize that what we're in now is a retracement, and it's probably going to be a big retracement, and what we need to do is either hold in and then get in again, so we need a huge stop, or we need to change our minds and try and rescue the situation. Now, our strategy would have got us in. It would have realized that we're no longer in an uptrend, we're no longer in a sideways consolidation, we're actually in a strong retracement. And then what it should do it should close out our trade before we start bearing a huge amount of pain, and it should sell the market and try to make up any losses we've incurred in the first trade and regain some of our losses, plus make a few pips for the pocket to make the effort worth in actually trading the markets. So that's what our strategy did. It got us in. We then got stopped out, and then we made some pips here. So I think the actual trade initially resulted in I think a 63-point loss to begin with. It reversed and then made us 88 pips. And that's what a strong strategy does. It gets us in, it tries to make the best of a situation. If it identifies the market has changed and we shouldn't be hoping that the trend will continue, then it gets us out. It doesn't fuss around. It makes an instant decision. It decides the trade isn't worth waiting for it to consolidate. The actual fundamentals of the market have changed, and it will try and make the most of a bad situation, and it will reverse. And it actually gave us, from a loss, it turned a total profit of, I think, well, it's those, which is 25 points. So we ended up the day with 25 points on the pound yen. Now, many traders would have gone through all this pain. They would have got in, they would have looked at it come down, they'd think, oh, I'm going to hold out a bit longer, it's going to start going up soon. And then, they may even move their stops if they're not great traders, and it will then start to come down. It would have gone below this low here, and then they'd be thinking to themselves, oh bloody hell, just give it a few pips longer. And then there was this strong bearish candle here, and they would have thought, well, I can't take the pain any longer. And what would have happened is, at this point here, almost at the very low, the traders that got in on this trend up here would have got out down here. That's a huge loss. Now, that's happened to me in my early days of trading before I learned how to trade, and that has almost certainly happened to you many, many times over. Now, the reason you've joined our website and the subscription to these signals is because you believe in a good strategy. Now, just follow the rules, follow the signals as they come out, and you can see that the strategy is based on sound principles of trading, and you just need to follow those sound principles. Okay, that's all I wanted to say. Cheers, bye.